Defying the stereotypes, breaking the rules. You can't tell me what is for me. Yeah. You got a lot more behind those pretty eyes, but you gotta let the world see. Yeah. So shake it up. Now is the time while you waiting. You're good enough. Now is the time while you waiting. What are you waiting on? Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Oh, don't let them, don't let them, don't let them, don't let them bring you down. And don't let them bring you down. Oh, don't let them, don't let them, don't let them, don't let them bring you down. And don't let them bring you down. Don't believe all that you see in magazines. Filtered images so blinding. Yeah. You weren't designed just to be somebody's dream. Find your voice and break your silence. Yeah. So shake it up. Now is the time while you're waiting. You're good enough. Now is the time while you're waiting. What are you waiting on? Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Don't let them bring you down. If they ain't rocking with you.
Welcome to the Retirement Learning Lab. My name is Van Richards, and this is the daily NASDAQ market update. Thank you for joining us. We're going to give you a quick update of what happened today in the stock market, and we're going to centralize on a couple of individual stocks and talk about some of the attributes of those. The idea that we use in working with people and clients is we help them so that they can design retirement plans that won't run out of money while they're retired. And that does involve a lot of investments. So what we want to do is take a look at the NASDAQ 100, which is the 100 largest stocks that are in the NASDAQ. The NASDAQ has about 3,500 stocks in total. And that kind of reflects what's happening in the total economy in itself. So we also want to take a look at three other things today. We want to look at the dividends of these stocks. We want to look at the valuations of the stocks. And we're going to wrap it up by talking about the ESG attributes. That's the environmental, government, and social attributes of these different stocks. So let's get right into it and talk about what happened today. The market actually was mixed. If you see, the NASDAQ was actually down just a little bit, less than 1%. The S&P 500 and the Dow Jones Industrials, the market overall, ended up the day just barely, right near the end of the day. It was the day that it did end up, which it's been actually a pretty good week. If you compare this, though, to what's been happening around the world, there's a mixed bag which is occurring. If you look at what happened in Canada, Canada actually has had a down day. And you compare that also with the Asian indexes, the Nikkei index, the Hang Seng, and the Shanghai indexes were all down. And I think that you're going to see that that's indicative of some of the things that's happening in trade between the United States and between the Asian countries, particularly with China. And we're going to talk a little bit more about that with some of the stocks that we discussed today. The European markets, though, gives you a good idea of why you should diversify. The European indexes, led by the FTSE 100, was up for the day. And just when one market zigs, the other zags. So that gives you an idea of what it looks like on a worldwide basis. Let's take a look at the NASDAQ 100 and also a couple of the stocks that we're going to centralize on today. The markets in general are down, and if you take a look at the graph that we've got put up here on the screen, you can see that the gold line is actually the NASDAQ 100. That's the 100 largest companies that are in the NASDAQ. And it was basically in lockstep with Amazon and with Apple. And there's a good reason why that happens, because Amazon and Apple represent a significant part of the NASDAQ 100. So when they move, the entire market moves as well. If you look at what happened over the week, it was really actually a pretty good week in general. If this was after all the earnings calls, a lot of the earnings calls with Apple and with Amazon. So the week wasn't really a bad week. But what we want to do today is we've updated you a little bit on what's happening with the markets, but we're going to centralize on just those two stocks. Now, every day as we go through the market update, we're going to centralize on what's happened here with these different stocks. So we're going to centralize on Apple and on Amazon just a little bit. So let's get into that. Apple ended the day down about 2.45%. Now, there's a couple of things I want to bring up about Apple. A lot of you already know what the revenue drivers are for Apple. The biggest revenue driver for Apple is the iPhone. What might be surprising to you, though, is that a lot of the revenue does not come from the United States. Only 40% of the revenues for Apple comes from the Americas. The rest of it comes from around the world. And when we start looking at the valuation of Apple, you're going to see that there's some possibilities for more pullback because it's possible that it could be quite overvalued in general. If we look at what happened yesterday, it's actually just a reflection of what happened today. If you took yesterday's value on Apple and you flipped it upside down, well, this is what it looked like. It went down for the day. For the week, though, it really wasn't that bad. We can look at again, when I put the three of them together, this is just one stock individually. This is Apple. After the earnings call last week, it had a good rise and it's continued to rise. The big thing that you have to keep in mind about Apple is that they've gained around 70% in value from the low point when the market was down in between February and March. So a lot of what's happening really is pullback in the market in itself. And there's something surprising that you might find about Apple, and that is this.
The beauty of your side.
The surprising thing about Apple, it's actually a dividend paying stock. A lot of people don't realize that. It has a 0.75% forward-looking dividend. That means that they anticipate that they'll continue paying a dividend of 0.75%. And if you compare that to what you get today in a money market, that's actually not a bad value. And when you look at the valuation going up from the standpoint of growth, it just adds to it from that point of view. Now, it'll change just a little bit as we look forward to the stock split, but on a proportional basis, it's not going to have much of a change. But, you know, if you're comparing this to like a money market, it's kind of apples and oranges, so to speak, pun intended there. The idea is that a money market has a relatively safe value, whereas a stock's going to have a value that goes wherever the market goes in general. But just keep that in mind. But also, let's look at a little bit of the news that might be affecting Apple as we go forward. This was in Forbes a little bit earlier last week. And that is that Apple does face some headwinds in China as far as distributing their Apple iPhone. Now, remember a little bit ago, we talked about the fact that Apple only has 40% of its revenues, which are generated from the Americas. The second biggest market for Apple is China. Apple does face a potential lawsuit in China for a patent infringement in China. And if that is successful, it could possibly ban the sale of all iPhones in China. So yes, the value's been going forward, but we have to keep in mind what could affect that value as we look forward and seeing what's happening with the litigation that's going on there. Another thing that's happening right now, and this was actually just announced yesterday, Secretary Mike Pompeo detailed a 5-prong clean network program. And the clean network program basically means that there will be no connections to China. And this is just not for Apple. This is for all tech companies in general. It'll also have a clean store, like for the Apple App Store. All the apps will have trusted connections. I think the biggest comparison is going to be what we see with TikTok being controlled by the Chinese government. What the United States government is trying to do is to separate what's going on in foreign countries so that they're not able to get data from U.S. tech companies. And that's the reason for the 5-prong approach that Mike Pompeo did announce. The other thing to consider is also that they're trying to keep the cloud safe. So that's one of the ideas. And here's one that you might not have thought of, and that is that to ensure that undersea cables are secure also. Believe it or not, we still do rely upon a lot of data that's being transferred under the ocean through cables, and Washington is making a commitment to make sure that those cables are secure. And really, that's what you would want to do. The next stock that we want to look at is Amazon. Now, Amazon in itself had a pretty good week too. It ended the day not down as much as Apple. It was down 1.78%. And if we look at what has happened to Amazon over the past quarter, it's been really awesome. Their revenues were $88.91 billion, and they were only expected to have an $81.29 billion, which is a 9% increase. Earnings per share were up 587%. The big question in there is, can Amazon continue this? If we look at what happened yesterday, this was what Amazon looked like yesterday. This is what Amazon looked like today. And it's just, not anything significant that's happening with Amazon. But I think that what you see is a lot of times at the end of the week, if you have a week that's gone up, and look at this going forward, this is a little point that you can keep in mind. If you have a really good week, a lot of the traders, before they get out of town and leave for the week, they're going to pull some of their profits away. And they're pulling the profits away because who knows what might happen over 2 days over the weekend. So if unexpected news hits, then they've actually taken some of the profits off the table. And I really think that's what's been happening with a lot of the tech companies. They've advanced significantly, but we're seeing some pullback just to take some profits that's in there. Now, this is what Amazon, I keep saying Apple. This is what Amazon looked like over the week. And it was a lot more volatile than Apple, but it was still relatively profitable throughout the week. They ended the week up over where it began. But you want to look at what's happening in the news and ask yourself, can Amazon continue this type of profitability? And that raises a big question. Let's look at the news on that. So we have to ask ourselves this question: is Amazon recession-proof, or is it just pandemic-proof? Now, look at a couple of facts. One is I get Amazon boxes probably once or twice a week, sometimes more, and you may get a lot of Amazon deliveries too. And you might think that's the primary profit driver of Amazon. Well, really, it's not. Amazon Web Services also are a significant driver of profits, and it's a significant driver of profits in good times and in bad times. If you look at what's been put into cloud infrastructure through the United States, Amazon's building of AWS represented 32% of cloud infrastructure spending for 2019. That's a big number. So we have to think that that's a possible thing that can continue no matter what's going to happen. And actually, when you look at the valuations, what's being expected from different analysts, you'll see that there's a big difference in between Apple and Amazon. So let's take a look at the over and under profitability of what's going on with Apple and Amazon. I think that you'll see some stark differences between these two companies. This is information from Morningstar, and what Morningstar is saying is today, and this is actually the closing value of Amazon, was $3,167.46. Just another piece of news in there that's remotely related. Remember that with fractional shares now, which Fidelity is actually calling a slice, fractional shares, you don't have to buy a full share of Apple or of Amazon. You could buy a half a share of Amazon. So even though the stock's valued right now at $3,167.46, you could get a half. But the point is that Morningstar is saying that the fair valuation on Amazon is actually $3,500. Now, compare that to what the projection is on Apple. Apple's fair valuation is really more around $285, where today it closed at $444.45. There are several other analysts, big bank analysts like from Bank of America and from Morgan Stanley, that have also stated that Apple is overvalued. Now, remember, these are just hypothetical projections on what could happen. They're not guaranteed, and they're not buy-sell recommendations. This is just an idea to keep in mind. If you keep the idea of valuation in mind, I think that might help you if you are anticipating you need to take money out of an account. Let's say, for example, if you had a retirement account and you had Apple in there, maybe you want to take some profits out of it. If you're not worried about the valuation, you've got a long time, you might want to keep writing that out. But understand that companies that have a higher valuation over top of their fair value could possibly be more volatile in market disruptions. That doesn't mean that a company like Amazon, even though that it's undervalued under its projection right now, is isolated from volatility. Both of them are subjective to whatever's going to go on in the market. There is no guarantee. The only way not to be subjected to the market is to be out of the market. But let's take a look now at the ESG that's associated with these companies. I find this really interesting. This is a chart that shows you all 100 companies that are in the NASDAQ 100. Now, what we're going to look at is we're going to look at two of them, which is Apple and Amazon, and we're going to look at some of the attributes that are there. But you want to think of ESG as, is this something that I want to put my money into? Or is this something that I don't want to put my money into? Does it matter to me that a company is involved in nuclear power? Does it matter to me if a company is involved in pornography? Does it matter to me if a company is involved in animal testing? Well, those are the kind of questions that you want to ask yourself if you're concerned about environmental, social, or governance issues. And let's take a look more closely at Apple and Amazon and see what the analysts are saying that those two companies have going on right now. Apple actually has some really good attributes going on. Their data security, labor practices, political action, their innovation is second to none. They have social impact, which is good. But I want to bring one other point in there. Excuse me just a minute here. Supply chain is something that's really a question, though. If you watched what went on last week in the big things that are going on in Washington, gee, I had a moment there. If you look at what happened in the hearings that went on last week, a lot of the supply chain came into question. So even though it's best in class, it's something that you want to be concerned about. Now, let's take a look, though, at what goes on at Amazon. Amazon has the same good things going on from an ESG standpoint. They have a little bit more going on too, but they also have supply chain issues. If you watched what happened in the hearings last week in Washington that were remote, there were a lot of things that were brought up about Amazon's unfair treatment of their customers in their supply chain. And if that's something that is concerning to you, then maybe Amazon might not be a company that you want to invest in. But if it's not something that you have as much as a concern, then you wouldn't worry about it quite as much. Another attribute, three other attributes, which they have a very good record in, is environment, renewable energy, and governance. Now, here's one issue that bothers a lot of people with Amazon that sometimes goes under the radar, and that is that there is pornography that is distributed through Amazon through its different stores. If you look at what's available, you don't have to look at what's available, but the idea is that someone out there has looked and said that if you went to the Amazon store, you could find something that would be pornographic in nature. And if that's something that bothers you, then Amazon wouldn't be a stock that you want to hold in your portfolio. Now, let's just take a little bit more information here. I want to talk to you just for a second about this. Okay. Let's take the information that you just got. All right. Let's look at valuation, and let's look at ESG, and let's look at dividends. And let's say, for example, that with dividends, if you wanted more dividends, you would obviously buy companies like Apple. If you wanted to have companies that had good records in valuation or a good projection in valuation, then you would go more towards a company like Amazon. But you might ask yourself, how can I do that? Well, let's say, for example, if you owned an index fund, you couldn't pick and choose which one that you want to have exposure to. However, if you use a technique called direct indexing, you can. Direct indexing is where you actually own the entire index. You could own every stock in the NASDAQ 100, the S&P 500. Heck, you could even own every stock in the Russell 2000 and just pick and choose what you want, or to the proportions that you want. For example, if you saw that Amazon and Apple were representing a huge part of the NASDAQ 100, you could reduce that proportionately. And thankfully, to the fractional shares, you don't have to have a full share. You could have $100,000, you could have $10,000, and you could still own the NASDAQ 100, or you could own the S&P 500 proportionately. The other point in there that you can gather from the information that I gave you today is if ESG, environmental, social, or governance issues are important to you, then you can pull out the companies that bother you. If having a company that distributes pornography is something that's a concern to you, you could pull it out. And if you went back and look at that chart that I showed you earlier, you would see that there are about 11 companies in the NASDAQ 100 that do distribute pornography or have some connection to it. So these are ideas that you can use in your retirement plans. You can use them in your individual plans. And if you have a question about them, go to my website at richardsfinancialplanning.com. And if you want to find a time to talk to me, just go down there and click on the little blue button that says set up a conversation, and we'll find a time to talk. Other than that, I want to take just a quick moment and see what kind of comments that we had for today. George is asking, do you think that there will be more growth in the next week? You know, that's kind of, I would be more cautious about Apple as we go forward. I would be concerned about the valuations that are there and with what's going on with China. I think the lack of a stimulus bill could have more pull down from that standpoint. So I'd be very cautious about going into Apple right now. But from a standpoint of a long term, I think that Apple is probably a good stock. But you know, individually, you got to see how it's going to fit into your portfolio and what type of risk that you are okay with from that standpoint. The only way to get away from risk is not to own it. But thinking of what's going forward, though, we could see more profitability in the tech industry because of what's happening with the pandemic. There's more distribution of electronic goods, and there's more distributing through the networks that are available. So yeah, I think there could be some more profitability, but in the short term, I'd be cautious from that point of view. Okay, with all that, I want to thank you for joining me, and come back tomorrow. Actually, not tomorrow. Come back on Monday. Have a great weekend, everybody, and we'll see you on Monday.